Headline CPI data coming in cooler than expected this morning, but still up nearly 3% compared to this time last year. Still higher costs in focus, but consumer activity at regional bank Frost Cullen was strong in Q2. The Texas regional bank seeing a 3.7% jump in consumer deposit growth and strength in real estate loan products. For more, let's bring in Phil Green, CEO of Cullen Frost Bankers. Phil, it's great to speak with you today.
Great to be here with you, Morgan.
I always think a bank like yours is on the front lines of economic activity in real time. So what are you seeing from those front lines right now?
You know, Morgan, I keep our eyes focused on Main Street. We've got great information that we're getting from our customers. Every quarter, I get feedback from hundreds of our relationship managers that produce a report for us on customer comments. And you know, one thing I think would be of interest to you and your audience is every time I see the word tariff there, I circle it and underline what the comment was from the customers. And what I would say is that regarding tariffs, there haven't been a significant impact in the economy to this point. I think that what's been happening is you've seen people be agile, customers be agile, working with their suppliers. They're managing their own cost structure to protect margins. They're cutting costs as they can, and when they can, they are passing costs along, and those are being accepted by the customer. But the word I continue to see related to tariff is uncertainty. But I don't think the uncertainty is really about what their input costs are going to be. It's really about will there be a recession or not? Because businesses don't want to expand into a recession where they're not sure their products are going to be purchased. And so that's what's there. And I think that as we get more clarity around trade policy, what you're going to see if the recessionary worries abate, and I feel like they are from our customers' perspective, you're going to see projects that are right now being delayed, not canceled, delayed. I think you'll see them come to the fore. I think we could see some real activity in the next 6 to 12 months.
Interesting. You know, we got the National Federation of Independent Business this morning, the NFIB, and that actually showed that sentiment rose in July, although owners, to use the word again, increasingly uncertain about the economic outlook and many worried about the quality of labor available. That said, though, some viewing business conditions as better and reporting that maybe it is a good time to expand. So it sounds like that you're seeing something similar right now from your small business customers.
We are. I would say that things are good here. Our loan pipeline is good, but I see that where there are a lot of projects that are being delayed right now. And if we see the economy begin to pick up, if we see the Fed move rates down some, I think you're going to see some activity come to the fore.
Do you think the Fed is going to move rates down?
I think they will. I think the market believes that they will. I think they've done a good job on inflation to date. And, you know, we're in a place where I'm not seeing customers whose first reaction is to raise prices. In fact, they're really trying not to raise prices and maintain share and keep volumes up. So I don't think that we have that mindset that the Fed's worried about. And I would hate to see us get into a point of diminishing returns on interest rates where we're really starting to impact labor, you know, because it's one thing to affect asset prices. When you're affecting labor, you're affecting people and their jobs and their families. So hopefully we can all work together and see some lower rates soon.
Yeah, I do want to get your thoughts into our Texas-based company and what you're seeing as we hear about the permitting that's happening and the deregulation, or I'll say regulatory reform that's happening right now, and sort of this energy renaissance push that's coming out of the administration, what we've gotten from this tax and budget bill too. What are your expectations for that and what it's going to mean for business at your bank?
We've got a fairly large energy industry focus. And so what I can tell you from what I'm hearing from them is that it's healthy today in the mid 60s price of oil, but you're not going to see a lot of production increase at that price level. And the industry is not interested in producing their way into $50 oil. So you're going to see, I think, more efficiency in the business. You'll see production levels be pretty constant, but you're not going to see until we get, I think, a higher price much in the way of oil production. I do think there's a quiet bullishness that's developing around natural gas, and that is because of the great demand for all the data and the data centers that we're seeing. So I was talking to someone just yesterday who is a significant producer, and they're beginning to have a bullishness around that, particularly as you have LNG capacities comes on, and we really need to get some more pipelines in place too. But that's an interesting thing to keep our eye on.